8/6/2011. It's a very nice day. It's Saturday morning, and we've been talking about the U.S. debt being downgraded and what the Dow will do on Monday. And what we're talking about is a public analysis model called moving averages. And what happens within trends is that when you have bull trends, moving averages rise in value, which makes the pullbacks viable, and they bounce and keep making higher highs. Right now, we are crossing over. The blue line is a 10-day and the red line is a 20. And because of the amount of selling, we're finally starting to see that turn. That means that when you're trading the market on an intraday level, any pop-up in volatility, such as Friday, or any upside volatility between short sellers and bulls, is that the upside volatility will consistently roll over, and any upside moves or any gaps in pre-market within the Dow 30 stocks, the leadership will not, they're going to roll over. And basically, this is the beginning of not a bull trend, but the beginning of a bear trend. And bear trends have a way setting themselves up. When I show the neckline here, MMT, this is where the 2011 neckline was, right here. This is your highs. Any upside move, when they come down and test the 100-day and the 200-day moving averages, they bounce up, but they roll over because these are going down in value. The 10-day has crossed over the 20, and it's just the beginning of it. Now, when you have a bull rally versus a bear rally, is that these moving averages are all going up in value. You see how they're going up in value, and you see how you get the long-term breakouts? This was the turn in looking at shorter-term moving averages, and even though that we were going up, we were declining until this line, the 100-day, kind of flattened out here, and it's been rising. That's what supported the bull trend. However, trends change. And generally, with the kind of selling that we've had here on this daily chart in the Dow, and we had a bounce up here, is that this pink line is a 50-day simple moving average. So every time the market's going to come up and hit that now, it's going to roll over. Meaning that if you're trying to buy and hold something on a bull move, you're going to get taken to the woodshed. Because you're not in a bull rally. The bull was here, and the bear is starting to come into play. And a bear takes a while to set itself up. And when we look at the key indexes and key sectors and indices and everything that we look at, is we look at where that weakness is built, so that you understand that when you are getting upside volatility and price action, that you're going to have to sell the long position, but more importantly is that they're going to roll over. This blue bar is a moving average convergence divergence, MMTs. What happens is that when these things go into sell signals, and I'll show you what a sell signal is. This is how long we stayed in a daily sell signal back in 2008. But then again, when we had the bull rally, the strength of the bull rally was building because we dipped a little teeny bit back in 2010 and put the low in, and Bernake came in with QE2. But it wasn't any significant on a percent level. We are headed toward that daily sell signal. When the daily sell signals start, by the time they start, you're going to come down here. And every moving average does have support, longer term ones. So within the structure of the Dow is that depending on how we open up, if we open up and we come down here to the green line, that's roughly about, well, here, let's do the math. The 200-day simple moving average on the Dow is right here, and that's 10,756. That's this line down here. The Dow closed at 11,444 right here, down here, 11,444. Wow, 11,444.61. So when we take a look at what's below the market, we take a look at how people are going to respond in the tape. We take a look at that. They're going to be looking at these simple moving averages and making decisions as far as institutional traders, hedge fund managers. And the thing about it is, it's just now starting. We got, so the 200-week moving average, and you guys write it down, it's 10,756, and the close was 12,444. Well, if you do the math from 1144 and you take 10,756, subtract the 2, you'll see how many more Dow down points that there is within this reversal before it finally comes down there and tests it. One of the things that people don't understand about that green line, which is a 200-day simple moving average, is that moving average is declining in value. It's not flat. And it has, and the lower that value goes, the weaker that the support level will be when this is declining. These will run first. Eventually, the 50-day moving average will start to tip over if we're coming down there. And the blue line, the 10-day, will come down and cross over the pink line as we're moving down there in that direction. This moving average convergence divergence here, as it descends and goes lower toward a sell signal like this, because in 2010 we only had a very minute one. However, there was a lot going on here when we hit that daily sell signal. It was only for 4 days, 5 days here, and it got back, and we started a new thing with QE2 and Bernake, and we made all-time highs, and you can see that value ascending. You can see all the moving averages going up in value. Now we have a turning point. So as we progressively move forward through the dog days of August and into September and October through the calendar year, is that the Dow is setting up. It's not in a new bear market yet, but it's setting itself up. Let's put it that way. And as it sets itself up, the trade management will mean that we would stay, because as these things change and you get, and as this goes toward the, going into a sell signal, there isn't going to be any stimuluses that's going to bring that sell signal out once this one starts like it did over here. And new bear trends take a while to set up, just as a new bull trend is developed and sets itself up. They take time. Everything has a time element. So we're going to be carefully watching over the next 5-day period, is that as this starts to turn more and the value of these moving averages go down, see, the 10-day moving average was 2302. Well, hey, it dropped to 20, or I'm sorry, not 22. I'm sorry, I got to open this up. 12,302 was the 10-day moving average on 7/24 and on that week. And during that week, the following week, you can see that the declining value is 12,203. And that meant that every time that we had upside volatility, as we said, short the highs. You can't drop in value here. When they do drop in value here, and the 20-day moving average is over here, and it too has been dropping in value. When they drop in value, the upside move to resistance is to be sold short. And that the market is weak. It's not strong. Meaning that, yes, you can come down and consolidate within volatility, but the consolidations will be weak before they break lower. Now, every market, because of the long-term move off of the 2009 lows, this 200-day moving average, when we do come down and test it, that's at, like I said, that's at 10,756.85. When we do come down and test it, we will look for a bounce. However, the upside volatility will be weak You will get upside moves, don't get me wrong, but they're going to be weak, and you're going to have to sell short. And that's how the indexes, and this is only 30 stocks in here. That means that the leadership is selling, and the leadership stocks are weak. There isn't any great, strong leadership when this is happening here. So as we move forward next week and the week after and into September, we're going to be monitoring these key support levels, and if they sell through it, you will see even a bigger down move. This is the neckline down here, or the 2010 lows. This is the upper end. You test the resistances and you can test the support levels, and you don't ever see these support levels until this start happening here. And everything has a time element as it sets itself up. When you hit a bear sell signal, remember that the correction started up here. This was a rally, but we've been descending in value, and these bars are much lower than when we were up here. We were extremely overbought, as we have always told you. And that this was the first weekly correction here. This was the second multi-weekly correction, and this is the third one. The third one is greater in value than this one here on weekly bars. The weekly value, the weekly drop in value from the high to low. So let's take a look at this weekly high. This weekly high right here was 12,282 on this weekly high here. The weekly low was 11,139. Well, if you do the math, how many points is that? And the weekly distribution. That means that this index is extremely weak. The haircut that has happened here in Dow points equal weakness that builds in new bear trends that set up. You're not in a new bear trend yet, but you're in the beginning of it. And the thing about it is, we call them, and you know, it's all going to come down to how you benefit from it. And you're going to benefit by understanding that daily trade management and why things are selling and making lower lows. This Dow reversal here on this week, the high was 12,679, and the low of this weekly reversal, the first top right here against this right here, if you do the math, that was 12,083 on a weekly level. You could call it 600 points. Here, if you do the math correctly, this second week, 12,282 to 11,139. How many points is that, MMTs?
It's close to 11.
It's close to how many points?
1,100.
All right. Now, if you think about it, if you take the weekly reversal, the high at 12,679, and you take the second weekly reversal down to 11,139, how many Dow points have been erased?
About 1,700.
About 1,700. You know what, my friend? That is one hell of a haircut. That is one hell of a haircut. That's how weakness builds. And the reason why the weakness and the reason why they make lower lows is because of the amount of contraction here, descending value, is that any up move now, it's not like buying dips over here or buying the lows over here and making higher highs. No, they go up and make lower lows now.